repairs on a car, helping family members out, maybe your children or something like that. It's just a really easy way. Now, one simple way of doing that would be utilizing a spousal RRSP. What a spousal RRSP is, it's one person contributes to it, and the money is held in the spouse's name. So if I'm married, I contribute to it. It will use up my RRSP room, and I get the tax deduction for my income. However, it goes in my spouse's name and it becomes their money. Like, let's make it very clear. This is not a joint account. I put the money in for a spouse. It becomes their money in their retirement fund, in their new spousal RRSP. I got the tax deduction though, and they get to keep the money. Now, I do know someone it wasn't me, but I do know an advisor, a new advisor who set this up. You have to be very careful if you do decide to set this up at the bank. Make sure the paperwork is done very well, because you can easily mess up on who's the contributor and who is the beneficiary or the account holder, essentially. And I do know of someone who messed them up and reversed them. So when the tax bill came, there was an extreme high amount of overcontribution, and they were able to unwind it, but that advisor no longer had those clients. So it just becomes a bit of a headache and a huge mess, and nobody wants to have that. As I said earlier in the $50,000 story I talked about with the $9,000 taxes, that is the reason why we utilize spousal RRSP. People would say, well, why don't I just my spouse have their own RRSP? And that's fine. You can utilize that if they work and something like that. But the reasons you would utilize a spousal RRSP is maybe your spouse stays home with the children or makes significantly less money than you. And that means their personal RRSP room can't grow, right? So it comes off my RRSP room. So if I make a lot of money and I max out the room every year, and my savings are starting to get further ahead of my spouse, then I can contribute to a spousal RRSP. I still get the normal tax deductions that I've always been getting by contributing to a RRSP, and now my spouse ends up with savings. And what we're doing is going back to the $50,000 analogy, right? If I'm going to be up here, the other person's going to be down here. Now we're just going to level them out. So in retirement, we're going to withdraw similar amounts and they're going to go down together. That's the ideal situation. And this is why we're doing tax planning, right? Because again, $50,000 has a $9,000 tax roughly. $25,000 only has $3,000 each. So let's go down like this. The same amount of gross money comes into the household, $50,000 from one person and $25,000 from two people. You're still achieving the same thing, but you're doing it in a more efficient manner, and you're not giving money to the CRA. One of the biggest complaints I had from clients in practice were they didn't want to spend money, they didn't want to give money to the CRA or pay taxes. One other side benefit of the tax conversation is if I'm earning so much more than my significant other, I'm in a tax bracket getting a deduction out at 40%, let's say. But in retirement, again, the $25,000 withdrawal rate, maybe they're at a 20% rate. So it's not even just a dollar amount. It's that I got 40% savings reduction in my my income deduction, blah. And they're now going to only pay 20%. So not only is it the $3,000, I have a big spread on the money alone being contributed. That's a significant savings you can do. This is very easy, simple things you can do for yourself in a financial planning situation without having to do any tricks or do anything fancy. Very simple points to think of. One, again, it uses the contributor's RRSP room or the amount, right? That's me. Now, how do you know room? It's 18% of last year's income up to a certain maximum, whatever that may be. So if I made $100,000, I would gain $18,000 of RRSP room. That would be used up in my RRSP or spousal RRSP, but that's the two uses we're using here. So again, we're using it for my contribution room. I get the tax deduction based on my income in my tax bracket. And then the other part about it, now who can contribute to this? Very simple, is you have to be legally married or be in a common law situation. We talked at the beginning about the withdrawal little trick. This is called the 3-year attribution rule. What this means is if I contribute this to my spouse's RRSP in 2026, They cannot withdraw the money in 2026, 2027, or 2028. It's a calendar year that's contributed, and then the 2 following years. What this means is if they withdraw money from the account in that period of time, the tax hit will be sent to me. So the reason is because I'm the contributor. The reason the government or the CRA did this is because you don't want to have a small tax, like a short-term tax dodge that couples would utilize, and this way it protects the CRA from breaking the rule. We're supposed to be saving for retirement, not just using it for tax dodges. And then you got to be wary of the attribution rule, and that's what a spousal RRSP is. I hope this video is a little more clear and concise on how to utilize it and what it's for. If you have any questions, leave them in the comments, or if you enjoyed the video, please subscribe and check out my other videos on my channel. Now, let's go over really quickly what a spousal RRSP is in short form. A spousal RRSP lets one partner contribute to an account for the other's retirement. It uses the contributor's tax deduction, so their marginal tax rate for the income tax deduction. It uses up their RRSP room, and then it uses the account holders, the spouse's taxes when they take it out in retirement at hopefully a significantly smaller margin, as well as it helps you plan for tax planning purposes, withdrawing money into the same household to save on paying the CRA between the both of you. Now, you also want to be mindful of the attribution rule for 3 years. You just want to think of timely withdrawals and set it up ahead of time. Thanks for spending time with Cozy Financial Planning. Again, my name is Aaron, and I hope to see you in the next one.